first get us started and kind of go over kind of an overview of what we're going to be covering today on this webinar. We're going to be talking about some strategies to help to increase your bottom line, that net operating income, and by utilizing certain types of technology, but also some manual processes and processes as well. And then we're going to be talking about some revenue. We're going to be talking about what is revenue management and at what point would it make sense for you to begin to implement it, why institutional investors use this type of technology and process that will help outperform the market, and how you can use it too. We're also going to talk about a few case studies as well from Tim's standpoint there. And we're also going to talk about how these same institutional investors use this technology even in a downturn to stay above the competition. Because it's, I think for a downturn or some sort of a recession, if you will, that's where a lot of this is a major missing piece for a lot of these properties. And then we're going to be talking about some of the technologies that exist today to help to automate rent calculation. So obviously we talk about rent collection a lot and automating that, but this is really about calculating the rents and where to actually set your rents based on your market, and doing it on a real-time basis, or on a rotating or a real on a, I don't know what you call it, but on a reoccurring basis or on a daily basis, and resetting those rates. And then even though you might not necessarily want to spend some money on some technology, we're going to talk to Tim about some manual processes that we can put into place as well for improving property management and asset management and things like that to be able to increase the performance. So before we get started, I'm going to introduce myself, Tim, and then I'll have Danny introduce himself. And then Danny, I'll have you turn it over to Tim and have him introduce himself and why he's such an expert in this space. So, because Tim and I met for the first time in Dallas at the Think Multifamily event. I have that coming up in a couple of weeks. But at the Dealmaker Live event in Dallas. So it was nice to be able to have some FaceTime with you, and we had a conversation around this. And I said, we got to get you on a webinar. So I know you're really passionate about this, and it's a topic that I don't know a lot about, but I have a lot of questions surrounding it, and I know Danny does as well. So I'm Dan Hanford, one of the managing partners with PassiveInvesting.com. So for those of you who are on here and are interested in following us and wanted to join us on some of our future opportunities that we have available, you can go to PassiveInvesting.com and fill out the investor questionnaire there, and we'll jump on a call with you to see if some of the projects that we're working on will be a good fit for you. And so that's just PassiveInvesting.com. And I'm going to turn it over to you, Danny, and have you make a little bit of an introduction as well, and I'll have you turn it back over to Tim.
Yeah, thank you, Dan. I am Danny Randazzo, another managing partner at PassiveInvesting.com. I live in Charleston, South Carolina, with my wife, Caitlin, and our golden doodle dog, George. We enjoy taking walks when we are not going out and buying real estate. My background is in financial consulting, and so for our team at PassiveInvesting.com, I handle all of our financial analysis, asset management, and some investor relations with Dan in our value add deals. So we look at properties that are built between 1990 and 2005, plus or minus about 5 years. And we look for those Class B properties that have value add potential, where we can go in, do work ourselves using our own contractors. It's not that we're physically doing the work, but we go in and implement a business plan to add value through renovations on the exterior, and mostly focused on interior, where we can increase the overall net operating income that a property generates and force the appreciation of that asset. So take it from maybe a $30 million property to a $40 million property by doing some of those renovation pieces. You can certainly learn more about us. Go to PassiveInvesting.com. If you want to know some fun facts about me, I've got 23 fun facts out there on my website, DannyRandazzo.com. So with that being said, Tim, please tell us about yourself.
Absolutely. Well, thanks again for both of you having me on. I'm really excited. And I've spent the last 11 years in multifamily technology, and really helping to deliver value through asset optimization and performance. So whether that's through selling technology directly or implementing strategies such as like short-term rentals, I've kind of helped do and really go down the path of a lot of different nuances, specifically with the institutional market. So really thinking about, you know, guys that are 10, 15,000 units and above, and helping them adopt these strategies across their portfolio. And at Dealmaker Live, I was fortunate enough to meet Dan. And as you know, I myself, much smaller in the multifamily investing game personally, but it's really important to me to start educating, I think, maybe someone smaller than that 15, 20,000 unit player, institutional level player, because there's a lot of revenue that's out there. And we just need to, I think, change or understand what's possible for us to do to, you know, make our assets grow in revenue. And outside of maybe just that forced appreciation and a fantastic business plan, when you start operating it, what can you do day in, day out, week in, week out to find that quarter point bump that overall really matters in the deal? So I'm looking forward to chatting with you guys today.
Well, I know that just with you talking right there, I got lots of questions that are just coming up into my head as we're moving forward. So I know this is going to be a fun webinar. And for those of you who are watching the webinar, if you have questions, feel free to type them there into that Q&A box, and we'll try to get to them if he can get to all of my questions first. No, anyway, so the biggest thing I would say is let's first talk about like revenue management itself, you know, because we talk about property management and asset management and various things like that. And I think, you know, a lot of times what we miss out on and what we miss as we first get started is that revenue management piece of it. And, you know, a lot of times we'll see a lot of these larger institutional players bidding up properties, and we're scratching our heads trying to figure out how are they able to make these numbers work. But when we can see that a lot of these institutional players are using technology and processes like this that we're going to talk about today in their properties, it starts to make a lot more sense, because they're starting to actually run their properties more efficiently, improving their bottom line, and even that quarter point bump is going to make some major changes in the underwriting. And so talk to us first a little bit about, you know, how you would define this revenue management piece.
Yeah, happy to do that. And I'll tell you just a quick little funny story. Last year, I was talking to one of the largest owners in the country of multifamily assets. He runs one of the, you know, really big funds. And he told me, he goes, Tim, when I'm out buying a deal, what I look for is mismanagement of operations through revenue management. And if I see, you know, that this property has had a history of never having revenue management, I know I can go in 2, 3, 4, 5% higher, because of my sheer operational technology performance that I know it will get. And I thought that was really interesting that, you know, he's a big guy, he uses these big systems, but like, I think we can scale that down a little bit and have some really good business practices internally to make sure we maybe can come up a little bit in our bidding process as well. So what is revenue management? It's really this idea of how do we balance revenue and occupancy at the asset to optimize total revenue. So a quick maybe example of that is, you know, do you make the most amount of money on your asset being 100% occupied? Some people say yes. They say, sure, you know, if I'm 100% occupied, there's no way I can make any more possible dollars. And, you know, the counterpoint to that, or the revenue management perspective to that, is there's actually and you actually want to always have some availability within the property, usually, to have something to sell to somebody that really needs it, right? So they call it groceries on the shelf. You walk into a grocery store, you really want a bottle of water because it's hot outside, and they have nothing to sell you, you're not going to give them any money. But if they have one bottle of water left and it's cold, and, you know, and you really want it, you might pay extra because it's that one bottle. And this is a similar example that we need to make sure we're keeping an eye on the balance of revenue to occupancy to really drive total long-term revenue of the asset.
And so, Tim, going back to that definition of what revenue management is, we're not talking about expense, the expense operational side to the property, or managing payroll or anything like that. We're really talking about that top line income, gross potential rent, the GPR to the property, based on the revenue management, where it's strictly the rental income compared to occupancy, right?
Yes, at the most fundamental, simple level, yeah, absolutely. And we would probably graduate down into leasing operations to really find efficiencies there. And really that entire leasing funnel, if you will, from guest card and marketing all the way down through signed lease. We're really looking at that whole funnel. And then on the back side, your renewals. So anything revenue centric is really what we care about, or is what I tend to major in, and not as much on the expense side.
Okay. And so from a technology standpoint, is this a software? Is this some app that people just download and they can start to gain the benefits of the revenue management, or what I'll call revenue optimization at their property? Or what, how would someone methodically, kind of step by step, go about exploring? First, we need to learn a little bit more about revenue management, but then how would they methodically go in and implement something like this?
That's a great question. And I think, Dan and I were talking a little bit about this, that, the one reason why institutions are more successful in using revenue management in a very pervasive way, like 60, 70+% of institutional assets leverage a revenue management tool. And that's because their unit sizes, right, their property sizes are larger. So on one hand, if the people on the phone here today have larger assets, maybe 100 units or more, even 50 units or more, it might make a lot of sense to actually have a technology conversation. Or if you're below that, or you have, a specific type of property that might not directly fit the model we're talking about, we're also going to look at the processes. So you don't necessarily have to spend or implement this technology stack, which does take time, which is quite expensive usually. So looking to counterbalance that. Did that answer your question?
Yeah, that does. So if someone has, let's just say 100 units or more, they would probably want to explore the technology component to implementing revenue management. How would a property owner or a property manager go about doing an analysis to see if revenue management will help them? Because it sounded like, from our earlier discussion, most multifamily property owners will benefit from revenue management in a direct impact to their bottom line. And when we talk about bottom line, it's that net operating income that the property will generate. You will see a pickup there. And so how would we go about measuring if it's something right for our 150 unit property?
Yeah. I mean, a couple things you can do. One of the easiest that I like to do is go look at your competition for the property itself. So if you have like asset types within a few miles of you and they're all having dynamic pricing, that's an indicator that, you're probably missing the boat, right?
What is dynamic pricing?
Right. Dynamic pricing is this idea that on a daily or weekly basis, on a semi-frequent basis, your rental prices and terms of leases are changing to optimize how the property is receiving demand. So how many guest cards and how many signed leases is this property bringing in? What's my competition doing? And what's the sub-market kind of telling me from a demand perspective will all drive a math formula that calculates on the back end what a rental price should be and what length of term that lease should be for. And most of these systems change on a daily basis, so you can capitalize on the small changes in your sub-market to capture that overall revenue.
Okay.
And so I've seen that in some properties before that you go in and the leasing manager, let me go check the pricing for today, and they go and check their system and see what's that pricing. And it also, I think, creates for some of those prospective residents a sense of urgency, because if that's the price for today right now. So as long as you sign today, that's what it is. Or they might lock it in for, 1 day, 2 day, whatever. Yeah. But after that time period, it's going to change, and so that your rate may go up, but it could potentially go down too.
So think of it this way, right? I've never met a human smart enough to be able to calculate lease turn, amenity costs, demand formulas and calculations to capture, an optimal rent. And it always comes down to a simple math problem. If you have 200 units and you're off by $5 across the board on all of your leases, you extrapolate that over a 12-month time period, how much money have you lost? How much, when you put that on a cap rate, value are you losing? It's material. And, the math problem just compounds the more units you have. So I think it's the revenue offsets. Once you understand the concept of revenue management, it's not a black box. It's not something scary. It's truly designed to just give you that, the answer to where we're usually guessing today.
Yeah, and just doing that quick math, $5 a month times 200 units times 12 months, that's $12,000 over the course of the year that you lost. But when you extrapolate that on, I'm going to just say a solid market around the country that's at a 5.5% cap rate, it's about $215,000. So almost $250,000 in value that slipped right through your fingers.
That's right. That's right. And it's just simply because most of us aren't smart enough. Well, I've never met anybody smart enough to be able to have and manage these calculations. So, I think the good news is that even if you don't feel you may be in a position to leverage a technology solution, we could talk today about some of the tactics you could use by yourself to maybe capture some of that premium.
Yeah, well, first, I think going through that example, I think people are very interested in this revenue management and kind of technology side of things. So knowing
Sure.
that the revenue management and the technology can help the bottom line, all owners increase their net operating income, how do we go about setting this up? Do we call you?
Yeah.
Do we go to your website? Do you get a free analysis of impact? Like, what are the next steps there?
Sure. So, I do fee-based consulting, and so I'm happy to, have that conversation with you, evaluate what's best, and just a quick conversation, and then we can see if an engagement makes sense. Or if you're really confident, you can go directly to the software providers out there. So, I'll give you the list of 4 major providers. So you have RealPage, which has some products. You have Yardi, which has some products, and Appfolio, which has products. All 3 have, varying pros and cons. And, through a conversation with me, I'm happy to really walk you through those differences by asset class of what you own, what might make more or less sense. Right. So on one hand, you have like RealPage, which from my understanding has, much higher cost, which more features and functions. It's almost a free version of Appfolio, which has maybe less functions, but is getting you the basic math behind the problem. So, there's a kind of a wide range in between. And from there, we can just decide if it's right.
So RealPage is one of them, and you said the other one was Appfolio?
Yes, and Yardi has a product in there as well.
And Yardi. And so kind of talk to us about, I know you had mentioned some case studies with some of these larger institutional firms that have used this. And I think, even before on one of our other phone calls we had, Tim, we had discussed about how, even in the downturn, some of these larger institutional, groups were able to stay on top of their market because of this type of dynamic pricing. Discuss how that actually impacts somebody, a property in a downturn. And I think this is where you had some of those case studies.
Yeah, absolutely. So, I think it was really interesting. And, somebody on, looks like Marina Wong has actually commented that, the idea of revenue management came out of the airline industry. And multifamily, Archstone Residential actually identified the problem and decided to marry up with, what the airlines were doing to create this theory of revenue management. Long story short, several other REITs began to use it. And since REITs, have to publish their financials, a study was done in a comparison to see how they fared in the 2008 crash versus other REITs not using revenue management. And what we saw, specifically with a demand-focused revenue tool, is that though everybody went down, the REITs that used revenue management stayed above the other REITs that went down by several percentage points, 3, 4, 5 percentage points. And that's because, if you kind of come back up here to where things were still good, but maybe starting to fall off the edge a little bit, the revenue management tools, since they're looking at demand of the asset, either that's guest cards in, conversion ratios, or signed leases, something was going on. They didn't quite know what. The math didn't know what was happening, but they saw demand drying up. So logically, if you have demand going down, what are you going to try to do? You're going to try to increase your occupancy, right? More heads on beds. So longer lease terms, incentivizing people with maybe a small drop in rate to get them to sign that lease today. And so what we saw is that we really passed on the occupancy, the tools did. So when we started going down, we really were able to ride out the rough times because we had better occupancy than the other REITs.
And that is very cool. Does this software also take into account, obviously it's looking at the competition and their occupancy levels and their current rates and stuff like that. Does it also take into account, like I think you had hinted at it, but I just wanted to confirm the length of the lease as well?
Absolutely. So that's a whole other piece of this that at some point would be great to talk about, is this idea of lease expiration management, right? Mm-hmm. So really making sure that, when your leases are expiring, they're expiring in the time you want them to, not the time that the traditional 12-month lease would say they would expire. Because if you could really get behind the 8 ball or have a lot of risk or exposure, as we call it in the industry, if you had a 200-unit property, 100-unit property, whatever, and 50 of your leases are coming due in December. Well, that's a big problem, right? Because now I have 50 people that may or may not elect to renew. I have a leasing agent running around trying to get the renewals, probably not doing a great job selling or having good customer experience. Significant portion of those may not come back, so I'm going to have to turn them and have significant turn costs. And then I'm going to have to, release them and go through the whole process, where you can spread that out across the year, giving people increased flexibility to have a better experience living at your property, and you having less risk for when those leases expire.
And I'm just assuming that the software or the data that's behind it is utilizing a massive collection of data. So one thing that we've learned in one of our kind of very specific properties location, it's a residential community, great school district. We know that the 3-bedroom units need to be rented in the month of August. If you have a huge inventory going into September, school has started. So as you look at a 12-month calendar, we typically expect less leasing activity in December and January. So the question to you, Tim, does this software and the data behind it use some of these learned trends across the country and also specific to that local market as it looks at lease duration and demand?
So it depends. Typically out of the box, no, it's not going to. And that's really why people know their properties best. So that's really where you couple this frequency of pricing calls or getting together to talk about your pricing and what's going on, coupled with what the tool is telling you, and ultimately telling the tool where it needs to course correct. Now, do we see some AI coming into this, learning over time what more, market trends are and helping to shift that? Yes. Probably not a conversation here today, but I would really say that's where people have to pair with technology, and your property best.
Yeah, and one follow-up to that, is there a built-in tool or setting that you can configure your inventory, all of your units, to say, hey, this population of 1-bedrooms are all upgraded with new appliances and countertops and flooring. And this population is a classic unit with older material and an older feel to it. Therefore, it's going to have a different pricing change.
Offset.
Okay.
Yeah, that's exactly right. So, classically, revenue management is really looking at optimizing base rents plus amenities.
Okay.
So that's kind of the classic model. We're actually seeing the shift to where we're starting to optimize at the amenity level as well. But one manual process that I see people miss all the time on their properties is that they set their amenities once and they don't do amenity audits. So they don't come back through on a semi-frequent basis. Have that leasing agent go walk the unit. Have that leasing agent really go look at the view. Is it looking at the pool? Is it looking at a dumpster? Like things like that actually really matter, and we really tend to miss it. Even an interesting amenity that most people don't think of is closeness. How close are you to parking or the nearest AC? If I got a property in somewhere really hot, Lubbock, Texas, I don't really want to be doing a long walk. So what we've actually found, and I've seen this in one unit specifically wasn't renting. All the others were of that unit type. One unit wasn't renting. We really had to ask the question. The people had to go in and ask the question with the data, why? And the leasing agent ultimately said, it's because it takes forever to walk to that unit. It's really hot and it's in the summer, so we just don't rent it. So it's like you really have to make sure that you are understanding all the factors that go into the value of that unit, and then you can really factor it in even as an amenity or negative amenity to calculate for that. So you actually have leasing velocity even behind your less desirable units.
Wow. Now, two things, Tim, my ears perked up on. The first one, Lubbock, Texas. Why did you say Lubbock? Are you a Texas Tech guy?
I'm not, no. I know several people investing out there personally.
Okay.
And I wanted to choose someplace hot for my example. And I just heard the story of like the Dust Bowls that they get out there. So that's fresh in my mind.
Very good. My second ear perk up was base rent. And are you able, as an owner, right, dynamic pricing, if I'm unfamiliar with it, seems a little scary. Can I set a minimum within the software where it's never going to go below a certain amount? So let's say in my market, I know based on my business model, I have to rent my 1-bedrooms for over $1,000. Now, I'm okay if we rent them for $1,049 or $1,059 or $1,029, but I'm not okay if we even rent one for just $990. So is that a feature? Is that a function? Should an owner even be worried about that? Or should the owner change their thinking to say, if the computer tells me $990 is okay, I'm going to go with it? Because I'm one of those guys who even, logically I need to check the GPS to make sure the GPS agrees with where I think we're going. Because, to me, like the computer doesn't control what goes on in the world just yet. So talk to me about that feeling of base rent.
Personally, I think this is where, a true revenue manager, somebody who comes out of the airline that has, that solely thinks of the pure dollar, they might argue and say, well, you probably shouldn't have a minimum because we're truly trying to maximize revenue over the long term. And so maybe taking that $5 drop below your minimum is where we need, it makes the most sense. Personally, over 11 years of experience doing this, I say no. If you know your property best, you have to hit some level of pro forma. I think the stress that you get, especially from partners or missing a business plan, if you go below that minimum that you've promised people, might cause you more headache or heartburn. So I think operationally, that's where the litmus test comes in. And we would probably say, no, we're going to put in that minimum. They do allow the minimum.
Okay.
So we're just not going to go below that. But it's interesting to know if it's offering to go below that, right? Well, okay, the system's seeing for some reason we need to be coming down. might be an indication that our supply is drying up. So I think what I would do in that case, if I saw the system continually hitting those low thresholds, I would go look at my demand. And I would ask the question, am I getting enough guest cards? Are those guest cards converting enough to tours? Are the tours converting to applications? And applications, what's my screening criteria? Are we blocking too many people out? To really understand the conversion ratio all the way down to sign lease.
Excellent. Dan, I know I've seen a lot of questions come into the chat box, and I feel like I've kind of monopolized the time here a little bit. So I'm going to turn it to you, maybe address some of these questions.
Sure. So one of the questions here is coming from Henry. Good to see you on here, Henry. What were the major softwares that you have on the revenue management module? I think you had mentioned AppFolio, RealPage, and then Yardi. Were there any other ones that you had mentioned?
So no, those are the main players out there today. So, by product name, you have YieldStar, which is, a RealPage product. RealPage has also purchased LRO, which is the other kind of main institutional product out there. And then you have Yardi, which has Rent Maximizer. And then you have AppFolio, which has their revenue management tool in their APM Plus product.
Okay.
And all have, pros and cons, strengths and weaknesses. So if you kind of want to have additional conversations about that offline, happy to do that. But those are kind of the four main players out there. Again, those are the ones that the institutional game is most familiar with. So if there's others past that, I'd love to learn more. But those are who, we typically see playing in this space.
And from that standpoint, if there's somebody like Henry on here who maybe only has one or two properties in the portfolio that maybe still meet that criteria, over 100 units, still could use the optimization, is there a product out there that might be like an entry level?
I mean, so unfortunately, I can't speak the price on these. I can just speak of what I hear. And classically or typically, RealPage products and the Yardi products tend to have a much higher associated cost. Whether that's you're using their advanced analytics, or using their pricing services, their actual revenue manager on the phone with you every week, their software tools, whatever, all the way, down to the other side of a Yardi or an AppFolio, which kind of comes with the product. So, what is right for your business, I don't know, but I think a large component of that will come down to cost. And truly, what can you do by yourself, right? Can you do lease expiration management yourself? Can you do amenity audits yourself? Can you really inspect your leasing agents to make sure they're introducing themselves, they're saying the right kinds of buying words to get people to take the next step and commit? There's several things I think you can do just from a coaching perspective to increase your bottom line. But ultimately, if you want the rent setting capability dynamically done for you, you're going to need to go do a software system. And it depends on your business model and your expense budget.
And Danny, did you have a question on this point too?
Nope.
Okay. The next one here is coming from Marina again. And her question here is, will there be a point in time, or do you feel like there will be a point in time that if too many people use this in the same market, that it might be counterproductive?
So, here's the beauty of revenue management. The tool should never care what the market's doing if your property is doing well. So if your property has really strong demand, really low exposure, why do you care what your comps are doing? Why tie yourself to what other competitors are doing? And we'll typically see this, we'll have one property that stands above the rest, where they're catching higher premiums. They're testing the market every week a little bit higher, $3, $4, $5, and they're winning those leases. So I would say no. I think a rising tide lifts all ships. And so I think the more data we have in the market, the better these tools and the smarter these tools will get. But at the same time, I never think a tool should tie you to your comps. And if in your evaluation you find out that the model is really heavily reliant on the competition and it won't decouple, if you are in a position of pricing power, I wouldn't go with it. Does that make sense?
Yeah, that totally makes sense. Another kind of follow up to this is on the other side of it is, have you seen these types of tools being able to give out data in a given market based on when you're getting ready to acquire that property? What are some of the best amenities to be able to put into that property from a exterior standpoint, but also from even just an interior upfit standpoint?
I mean, that's the right question, and that's where we're going, right? So I'm currently working on a project to do just that. So no, today there's really not a software tool that I know of that is really going to be giving you sub-market level amenity prices or recommendations. But, I really think it's interesting. And there's a company out there called Tour24, which is doing remote leasing. And within their app, they're embedding this ability to interact, for the prospect to interact with your unit and to tell you what they like about your unit, start collecting that data. And ultimately, as this becomes more and more adopted, we can start collecting this information and actually creating an amenity value more closely tied to what the submarket's telling us, which is really an interesting application for the next stage of revenue management.
Well,
and development and all that.
Well, in that Tour24, we've actually looked into that particular program, and it can also help on the expense side of things as well, because instead of having extra leasing agents or whatever having to walk the property with your prospective residents, this software can actually give them virtual tours and talk to them and walk them through the property and various things like that, and keep track of, like you said, their feedback in real time.
Which I think is just genius, right? And it's still version 1, so they're still, I think, working out some of the nuances to this, but I think that's going in the right direction of where leasing is going as a whole.
Mm-hmm. Man, this is a very, very fun topic. I love talking about this. So for those of you who are on, if you have any more questions, feel free to type them in there. I've had some good questions so far. I didn't realize that this had come from the airline industry and their dynamic price. I knew that they had done this kind of thing, but I didn't know that's kind of where it sparked from.
Yeah, they really had a problem, and that's, that they were giving concessions manually and just to get butts in seats. But, once the airplane took off, like they were just hoping that they had the maximum amount of revenue. So instead of giving giving concessions, manual concessions, they wanted to try to apply some data behind it. And ultimately, they were very successful, as we all know. Almost everyone's using it today. And that really funneled into Archstone, and Archstone took it to equity. And then, we saw the development of 2 software solutions. We had LRO on one side, we had RealPage on the other side. And they each took very separate approaches. So YieldStar really took this occupancy-focused approach, and LRO took this demand-based approach. And they both work well. It depends on kind of your asset and what you want to accomplish with it. So it's been now a while, probably 15 or so years. And we see a large portion of the institutional market using it, and it's really starting to come downstream as well. So it's just getting bigger, and we have a lot of room to grow, though, from getting smarter and using bigger data like AI, which is what I'm really excited about.
What are maybe a couple of manual processes that maybe somebody doesn't want to spend the money on the technology side right now? What are some of those manual things that somebody could do to kind of implement this on a non-technology basis, more of a process basis?
Yeah, I think there's several things we can do, and we've touched on it lightly. But the first is lease expiration management, really understanding your property by unit type and understanding where you catch the most demand yearly, and create really a sales funnel for each unit type. How many guest cards am I getting in this month? How did they convert to tours? Go all the way down that leasing funnel. And then you can start seeing month over month, year over year, kind of what the average is. And so, really you can have that litmus test of what's normal, and really where you don't want people to be turning out because of a demand perspective. So like I do this, I have a duplex. My first property I ever bought was a duplex. And I do this today, right? I don't want them ever moving out in December because I don't want to deal with this during Christmas. And so, I'm giving, I will adjust the term to be outside of that. And that's just from my gut, right? But as we have more units and as we have, more properties, throw it into a spreadsheet and you can really start tracking this over time just to get a good gut shot of where things should be.
And so you're going to give us this tool, this spreadsheet.
Oh yeah, sure. Why not?
I'm sure there's probably a spreadsheet out there that has probably been built even before they had these different software tools and stuff like that.
I mean, these processes are not new. Like I didn't come up with this on my own. I'm just someone who actually talks about it. And a lot of times I think, we talk a lot about getting the deal. You spend most of your time talking about raising the money, underwriting the deal, finding and buying the deal. But I think we really could do more in the space of now, what do we do with this after we're done with our repositioning and really driving for total performance.
Well, we've had a lot of good questions come in here through the Q&A box here on the Zoom platform here, Tim. I have one final question here that I'm going to ask from Marina, and then we'll go ahead and wrap it up for today. So the last question here is how do these apps find out about the rents of the day? Because usually these are not publicized.
Right. So, that's actually, it's a great question. And what they're doing is they're not doing an updated comp basis on a daily basis. They are relying either on people, like leasing agents, to go out and find the comps and manually enter them. That's one version. Or they're looking at signed lease data that's also within the software tool. It's also, so if you had 5 people all on, say, a folio, and there was enough density in a certain area, they might be able to aggregate and anonymize that data and feed it back into a tool, as an example. But typically, it's a leasing agent calling around on a weekly basis to get those rents.
That makes total sense. And, I know with especially we use on our properties, the Yardi Matrix software, and, they're all integrated into apartments.com and, CoStar, and there's a lot of integrations via, anonymous APIs and various things like that. So I'm sure that a lot of that data is used on the back end for their dynamic pricing tools too. Right.
And then, ultimately, again, the biggest thing, a takeaway, I think, is, we shouldn't tie ourselves to our competitors. We need to do what our property is saying it should do, and we should really key that off of demand. So really making sure your tools use demand in a smart way, I think, is the best practice from a revenue management perspective.
Any final questions on your front, Danny?
No, I think this has been super helpful just to know, AppFolio's out there, RealPage, Yardi's out there. I think if someone is looking at getting those products, I know I've gone to AppFolio, Yardi, and RealPage before myself, and you can get a little tutorial. I bet even if you go to Google and you type in dynamic pricing comparison, there's probably a beautifully written article that kind of gives you the pros and cons and helps guide you if you have less than 100 units, if you've got 100, or if you've got 1,000 units. That'll kind of give you the ability to gauge who you want to do. And I know you can do free demos with a software rep as well, so you could talk to them in more detail about that, so you can benefit and improve your property's bottom line and net operating income.
That's exactly right.
Yep. Tim, how can people that are watching right now, if they have further questions with you or they want to jump on a call and use some of your consulting to kind of help guide them and direct them into what's the best software solution for them?
Sure. So you can reach me at tim@auroraequities.com, AURORA equities.com. And I'm happy to have a conversation with you, kind of see what you need for your property specifically, and game plan around the best strategy to hit your pro formas and ultimately make you wildly successful.
Awesome. Well, again, thank you so much, Tim, for being here with us. Thank you as well, Danny, for being with us.
Thank you.
Those of you who want to reach out to Danny for any further questions, you can go to DannyRandazzo.com and reach out to him there. For those of you who are interested in investing with our group passively, just one more time, you can go to passiveinvesting.com. Thank you guys all so much for being here with us today, and looking forward to having the next webinar coming up next week.